Hey everyone, thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be analyzing this previous move that we've seen and what might be causing some area of resistance for the next few days or so. So if you guys like this content, please subscribe to the channel, click the bell icon to turn your notifications on, and join the Telegram channel that you can find a link to in the description below. So normally I show the 20-week, the 100-week, and the 200-week moving average. Today we're going to be looking at something a little bit different. We're keeping the 20-week and the 200-week, but now we're going to take a look at the 50-week, which has historically played some role in the price of Bitcoin. I primarily like to keep it down to 3 moving averages, but since we've hit this resistance point, I want to talk about it and look at what has happened in the past. So let's just look back at what this moving average has done, for the price history of Bitcoin. So, you can see here it really didn't hold much level of support at all. Maybe a little bit of resistance here, but ultimately, if you scroll back to the last market cycle, it did hold some level of resistance. This was in July of 2015, after we had basically been bouncing off of the 200-week moving average for many months. We then went up to the 50-week moving average and then got rejected back down to the 200-week. So obviously, we try to stay rational on the channel. We look at all sorts of possibilities so that at least you can understand if the price does move in a certain way, then maybe you can understand it from a historical perspective. Again, this is not for day traders, but it's for those who are looking to better time their entries into the market, typically by dynamically dollar cost averaging their buys and looking over a multi-year time frame so that they can watch the return on their investment hopefully grow over a several year time frame, a multi-year time frame, rather than say day to day. So again, this is not financial advice. This is just a strategy that I think is a really good strategy to go with. So you can see during this last cycle, after we came down to the 200-week, we bounced off it a couple times. We first held the 20-week as resistance, and then we held the 50-week as resistance before coming back down to the 200-week moving average. But ultimately, going into the halving, we were above the 20-week, and we continued to hold the 20-week as support for the duration of that market cycle. So in the current times, we've been at the 200-week once, twice, and we just went a third time to the 200-week moving average. And people will say, well, Ben, do you think we're going to go back to the 200-week? I don't know if we're going to go back to the 200-week. I'm not going to attempt to try to predict a short-term price move, and people that do are often just guessing anyways. They are guessing it. It's a complete guess as to what's going to happen in the short term. The math suggests that we're trending upwards more or less over the long time period. You can see this diminishing growth as we go up, but we're still more or less increasing. So if we zoom in here, you can see that we held the 50-week as resistance in July of 2015, and then came back down to the 200-week. And then later, after the speculative bubble blow off top, we held that 50-week moving average as support before going back up to the 20-week and saying, okay, it is resistance. We're now starting the beginning of we're in full bear market mode at this point, because we've broken through the 20-week moving average, which we hadn't really done on a weekly candle for a couple of years. And now we've broken through it. We came down to the 50-week, held it as resistance, came back to the 20-week, came down to the 50-week, held it as support, then to the 20-week as resistance, and then on we fell with the 20-week and the 50-week acting as resistance. So now, there were a lot of people speculating back in April of 2019 that the 50-week moving average would hold resistance, because if you look back over here, after getting to the 200-week, the 50-week did hold resistance. but in fact Bitcoin said, I don't care what your predictions are, we're not going to the 200 now, we're going to keep moving up. So, while this can obviously hold some form of resistance, there is also precedent for us to keep going upwards. But ultimately, the bearish scenario in any type of market, you need to look at all possibilities. And people were asking me, okay, well, am I going to have a chance to dollar cost average back at a lower price level because I don't have all that I want yet? Is there going to be another chance? Well, obviously there could be another chance because you can imagine getting rejected by the 50-week and coming back down to the 20-week. And if we come back down to the 20-week and hold it as support, then that's a good sign going into the bull, into a projected bull market for several years. If we come back down to the 20-week and then drop below it, then we're essentially kicking the can down the road another few months, and we'll revisit the 20-week. We'll fall down to the 100-week, which is at around $7,100 or so, maybe $7,200, somewhere around there. And if we hold that as if we drop below that, then obviously the next logical place to go would be the 200-week moving average. So there's obviously a chance that we're going to come back down. There's no guarantees that we're going to hold the 20-week moving average. And if we don't hold it, if we don't hold the 20-week, then again, this is where you would expect a lot of altcoins to start really bleeding with respect to Bitcoin. So, again, this is not a channel meant for people that are just going to FOMO into the market. It's meant for level-headed investors who can appreciate the macro level picture and, profit when the price goes up, but also see the opportunity if the price goes down. So again, when you're down in these points down here, the risk at these levels is around 0.1 to 0.2 using that risk metric that I made. But this is when the market is there's a lot of fear in the market. Everyone's talking about how cryptocurrency is dying, but this is where smart money is getting in. So on the chance that we drop, I just want people to be prepared because there's obviously a lot of FOMO in the market right now. So I want everyone to be prepared. If we can move past the 50-week, great. If we can hold the 20-week as support, great. This is awesome. We can start to build our case for a new bull run. But if we get rejected, then know that if you have 20 different altcoin positions, they're probably going to lose value with respect to Bitcoin. So we would expect their valuations with respect to Bitcoin to fall if Bitcoin falls below the 20-week. And if it falls below the 20-week, it's probably going to head to the 100-week at $7,100. And if it falls below that, it's probably going to head to the 200-week at around $5,700. So, this is obviously the bearish scenario. I just want people to be prepared. If you are following a dynamic dollar cost average strategy over over 2019, 2020, and 2021, then just consider this an opportunity. Obviously, the risk levels right now are much higher than they were just a couple of months ago, but that doesn't mean that these levels can never return. I mean, they'll return at some point, whether it's this market cycle or the next, they'll return at some point. And I would encourage you, if you're new to cryptocurrency or you're just looking, how do you get into the market? I typically FOMOing in after the price is going up a lot. There's often better strategies, in terms of dollar cost averaging, trying to reduce your risk, in terms of say daily volatility. Now, of course, you can find times in the past where putting in a lump sum would have been the smart move. For instance, putting in a lump sum here in December of 2018, or putting it in here or here. Essentially, going back throughout the history of Bitcoin, if you're putting in a lump sum at the 200-week moving average, then you've historically been doing a good thing. Even if you had done it at this point, the price dropped another, almost $2,000 from the 200-week moving average. But despite this drop, it quickly rebounded, and from the 200-week moving average has gone up fairly substantially in just a short period of time. I mean, we've gone from the 200-week moving average to where we currently are in about 49 days, and it's been a 61% move. So remember to keep the macro level picture in your mind. Don't get, some people, when I was doing some of the live streams, are like, okay, well, you're not, like, Bitcoin's going to 20,000 tomorrow. No, it's not. It's almost assuredly not going to 20,000 tomorrow. What we're doing is we're just adjusting our buys in the region because the risk has increased substantially in just the last week. So remember to watch out for the 50-week as potential resistance because it has held resistance before. It's currently at around $8,700, which is where the price of Bitcoin is currently sitting. You can see that we already moved above the 50-week to around 9,500, which has been an area of resistance throughout this market cycle, $9,500 or so. So keep an eye on that. If we get rejected at 8,700, look for 7,800 to be our support area. So going down from where we currently are, this would be a drop of around 10% or so. And then if we drop down to the 200 week, it's a drop of around 33% or so. So just keep these ideas in your head as possible future scenarios in a bearish case. So I hope you guys enjoyed the show. If you guys like it, please subscribe to the channel, turn your notifications on, and also check out the premium content, which you can find a link to in the description below. All right, guys, bye.